It's only a $500 million market cap, but I think it's one of the most interesting ideas I've come across in a while. It's a company called Largo Resources. Put limit orders in, don't push it. They're the second largest manufacturer of vanadium in the world. Vanadium is an alloy used to strengthen steel. The Chinese have mandated an improvement in the quality of their steel. And secondly, it's also used in electric car batteries. And the company is coining money. The price of vanadium a year ago was $4 a pound, and currently it's running between $18 and $19 a pound. We've engaged a consultant who wouldn't rule out getting to $25 or $30 a pound. And they're generating more than their market cap in terms of free cash flow. But it's small, it's speculative, it's only one commodity, it's vanadium.
We want to throw up the stock that Lee Cooperman just mentioned so all of you can see exactly what he's talking about. It is Largo. Lee, I mean, the stock is obviously up a lot. Let me use the opportunity then to get your thoughts on small caps, which a principal argument against the tariff worries and people who say the rally's been too narrow. The Russell, small caps, micro caps have all done incredibly well. What's the signal there?
In all honesty, this is talk that doesn't resonate with me. I'm very bottom-up oriented. I look at companies one at a time. A big chunk of the market is efficiently priced, but I try to look in that sector of the market which is not efficiently priced. And let me just give you the perfect example. I owned a lot of stock in Time Inc., the magazine publishing company, on November 1 of last year, actively trading at 10. 7 days later, Meredith Publishing paid $18.5 cash to buy the company. Nobody's going to convince me that $10 was efficiently priced. So, Largo's up a lot, but their earnings are up dramatically more. Their earnings are growing hundreds of %. You have a commodity that's gone from $4 a pound to $18 a pound, $19 a pound, and the earning capacity of the company has dramatically changed. But it's a speculative because of the narrow nature of their revenue base. But I look at things just one at a time rather than putting a label. And I also try to invest. I'm not a big trader. You got some great traders on your panel there, but I tend to invest. I try to be tax efficient. Warren Buffett, I think 30-odd years ago, went through the arithmetic in one of his great annual reports where he showed the relative after-tax return of buying every year you buy the new hot stock, you make 15%, sell it, and invest in next year's hot stock, as opposed to buying a 15% compound grower and hold it for the entire period. And he showed over 40 years, basically, you have thousands of times more money left after tax. And I've always made this point. Warren Buffett occasionally gets criticized because he has not kept up for 1 year, 2 year, 3 or 4 year period. But we have to look at his record and compound the money after tax, which is an unbelievable record because of his holding period.
Yeah, no
I
doubt
tend to be an
that.
investor, not a trader.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.